I won't hold it back further. The bull market that you must not miss is actually in Hong Kong. Hong Kong stocks, if you look over here, has been trending upwards, correct? As compared to S&P 500, a small outperformance only. But this hides the real magic. If we see in terms of year to date, you realize that the outperformance is massive. 30% versus 10%. And if we look in terms of a yearly basis, 44% versus 16%. Today, I'm going to share with you 3 key reasons why you must not miss out on the bull market in Hong Kong and why certain myths have to be dispelled. So if you're curious, continue watching. Hi guys, welcome back. Without further ado, let me justify for you the first reason as to why Hong Kong is a bull market is because if you look at this chart over here, which is the 200-day moving average for all its stocks, more than 80% of Hang Seng Index constituent stocks are above its 200-day moving average. The 200-day moving average has been like a sacred technical indicator suggesting the general mood of the market. And this chart in itself proves that this rally is broad-based. 80+%, the highest across all its years. And from this, you can also guess, it's not just in China tech, it's also in China banking, also in China industrials. All sectors are performing well, and that's definitely not a symptom of a bear market. So for investors still holding on to that myth that China, Hong Kong is uninvestable, it is time to change that. Majority are on the wave up already, as proven over here. Second key reason, China big tech is riding on the AI boom, and China's AI might be surprisingly strong. I'm not an AI expert, but it's quite clear that China's AI, such as DeepSeek, matches those of Western countries. You know, recently Google launched something interesting, correct? Which allows you to fuse videos and photos. But this has also been running around in China already.
Click on Hungan Video Avatar feature. This model allows users to upload voice and photos with one click to make the character come alive instantly.
This is by Tencent, and Alibaba also has very cool AI stuff.
这副眼镜具备通义千问大模型和夸克的超强 AI 能力，并将 AI 能力与各种生态进行了协同。有了它，骑车时高德地图的导航箭头直接显示在眼前，路口转向一目了然。在便利店看着二维码，支付宝的看一下支付就可以完成。
Very cool, right? And speaking about Alibaba, its share price has risen 17% right at this point of filming. The key reason is right now Alibaba is making chips that specifically for inferencing good enough to rival some of NVDA's offerings to China. As we know, semiconductor is now an arms race. It's a political tool. Donald Trump is putting pressure on NVIDIA to not ship to China, and China is realizing if they depend on NVIDIA, their arms will always be twisted by America. That's why within China, there's been a lot of push towards going for self-reliance, and Alibaba is just one of the many. A simple story like this can lift its entire sentiment, and Alibaba is not the only big tech benefiting from AI. My favorite is Tencent. I've had allocation there more than $100,000 already. And later I'll show you some results of it. Quarterly revenue has jumped 15% on AI investments. So what exactly is this revenue growth and what exactly are their AI benefits? First up, let me show you Tencent's profit growth. You would realize at 105 billion renminbi for the quarter, it's at an all-time high, correct? Profit growth year on year seems to have even accelerated, and I'll show you some segment breakdowns. The interesting part to me is that right now, at this profit level, compared to 2021 where Tencent was 700 Hong Kong dollars worth, you will realize it's arguable Tencent is cheap, correct? Previously, they are doing about 60 plus billion per quarter, now 100 billion. Why is share price still at 600 only versus back then of 700? Quite clearly, the answer is China is uninvestable, political risks, etc, etc. And the sooner we realize that it's past already, the sooner we need to reevaluate Tencent as a top leading tech player with enormous growth. Let me show you some numbers within. Second quarter 2025 results showed massive growth in domestic games, international games, and marketing services. Marketing services, as you read below, is actually their online advertising. And this is actually where they've infused AI for advertisements. I guess similar to what Meta has been doing to help its advertisers optimize for results. And when you can get results, you can of course charge more, correct? Weixin, which is WeChat, is its main social media channel, and using AI, it's been able to generate more advertising revenue for its customers, and this would likely trend upwards only. Let me know your thoughts and questions in the comment sections below. Smash the like button. It's taking our team hours to prepare this presentation for you, and hopefully investments into China, Hong Kong could deliver you big results, just like what I've seen in my own portfolio. If you're looking for a fee-based advisor to help you with your investment journey, to help you have a lot more clarity in terms of your own retirement planning, look for my links below. I can help you on a fee-based one-to-one basis, and these are raving reviews from my own private clients. Thank you very much, and let's get back to the third key point as to why Hang Seng is on a bull market, and it's because China money has still been flowing down at a rapid pace. How rapid? This over here shows 800 billion Hong Kong dollars year to date already as of July. And in 7 months, they are whisked away from the record $808 billion. That is the reason why Hong Kong Exchange is one of my preferred stocks to invest right now as a growth company. I'll leave links right at the back for you to follow on to that tutorial. But we should all think about this question. Why in the world is so much China money flowing down into Hong Kong? Why? Let's imagine this. In Singapore, if you see your bank interest rate coming down, which it has already, you probably wouldn't want to park monies in fixed deposit anymore, correct? So where will you think? You think of property. Maybe I'll go and buy a new launch condo. Seems a safe bet and seems a good place to park money. I understand that's a common feeling, and that still works as of now in Singapore, but that doesn't work already in China. You probably are aware that China's residential property has burst already. The good old days of chucking money in property and make generational wealth may have passed. So if cannot park money in property, bank interest dropping in China, as you can see in this chart over here, previously around 4%, one of the earliest countries to cut interest rates down to 3%, then where else to park money? Of course, in good growth blue chip companies like Tencent and Alibaba, correct? And I even brought in all the various stimulus that China's government is implementing to boost up its stock exchange. That rounds up the 3 key reasons, and I'll conclude things by showing you the Hang Seng Index is actually still very undervalued. If you see over here, 5-year chart versus S&P, massive underperformance. Because ever since 2001, it had that massive correction, which is only still recovering. If you're thinking you missed the bottom already, don't fret, because there's still a lot of legs up back to its all-time high. Expensive? Depends on your perspective. As of now, Tencent is aggressively buying back its own shares at a range of 583 to 614 Hong Kong dollars. They are signaling possibly undervaluation because right now price earnings ratio is 17.5 times. That low for a fantastic tech firm versus a historical 20 to 22 times. And I've also this to further justify that it's definitely not expensive in Hang Seng. PE ratio now at 12.45 times. If you go over at S&P 500, you'll be paying double the price. S&P 500 has tech, Hang Seng also has tech. As a value investor, I think it's very easy to justify today's title. Why the bull market in the Hang Seng Index cannot be ignored. Some most popular ETFs to get invested. CQQQ, this is what I own, and you can see it's a long, hard journey, correct? Second one, KWEB, very popular also. And last but not least, Lion OCBC Hang Seng Tech ETF. I think this is the simplest because it's Sing dollar based. You can even use SRS to purchase. Or you can also check out this previous video I have, which is on Hong Kong Exchange. Why as a company, it's a key beneficiary. Hope to see you there, smash a like, and I'll see you in the next video. Take care as always, goodbye.